market news now. Global equity markets touched fresh record highs with optimism about a U.S. rate cut underpinning sentiment ahead of key jobs numbers later today. Following the UK election result, London's FTSE 100 rose 0.3% at the open. The rand extended its gains against a weaker dollar, fueled by expectations that the Federal Reserve will cut interest rates later this year. In Asia, Chinese stocks are on pace for 7 straight weeks of losses as investor sentiment continued to weaken ahead of a key policy meeting this month. Looking at the all-share index, currently a little flat, the financials down 0.25%, industrials flat, resources 0.1% up, and the rand is at 18.19 to the dollar, 19 rand 68 to the euro, and 23 rand 25 to the pound. To give us more perspective on the markets and help us look back at the week that was, we are joined by Roy Mutini, who is a portfolio manager at Sanlam Investments. Roy, thank you so much for your time. As we wrap up the week, give me your sense of how you're looking at global and local market sentiment.
Hi, Natasha. Thanks for having me. So this has been an interesting week. We've gone through, there was the 4th of July when the US was closed. And then we had these 2 big elections. I mean, the UK election last night and the French election, which was between last week and this week as well. So a lot of the political risk playing out, plus the issues in the US around the eventual Democratic Party nominee to run against Trump. But despite all of this, it seems like markets just are looking through and continue to get to all-time highs. Across all markets, across all countries, what you're seeing is equity markets remain strong, especially in developed markets. And to me, this just feels like what market participants are saying is that they're confident that inflation will bottom out at the right level. Interest rates will start coming down towards the end of this year, and what we'll have is this softish landing that supersedes all the geopolitics and everything. And I think you're also seeing that here in South Africa. I mean, we had quite a bit of a rally. There's a little bit of confusion right now, but it's still, the markets are still up, still at record levels.
So let's look at what in terms of the rally that we saw locally following the cabinet announcement and the GNU agreements. It was quite interesting to see how local markets were performing. Were you getting in on that action?
Well, our view has always been that domestic focused stocks are very cheap, and you can have your pick of really good quality, strong earnings growth stocks trading at relatively cheap multiples. So that has been our positioning broadly since the beginning. Well, actually, for the last year or so. And you saw this come through when all of these stocks started rallying, and you could see them go up 5%, 6%, 7% on a couple of consecutive days. So I think it's just a confirmation of the value that is there inherent in some of these stocks, the domestically geared stocks. And you also saw money leaving the dual listers, which have been a big favorite, and coming back domestically. So I think good news for local stocks.
What are some of the questions you're asking yourself as we go into the second half?
So the second half is going to be very interesting. I mean, clearly the big geopolitical thing, the Middle East is the Middle East, but the big geopolitical thing still outstanding is what happens in the US election. But in truth, I think both, regardless of who wins, what you're still going to see there is a fiscal deficit that's moving to dangerous levels, and neither of them willing to address it. What are the consequences of that is a potentially stronger dollar. For us to succeed here, for our markets to continue rallying, what we probably would like is a weaker dollar. But that's going to depend on the direction of global growth outside of the US. If the US slows, but then the combination of Europe and emerging markets and China start growing as well, then what you should see is a weaker dollar and more inflows into our markets, which supports the rally that we've seen right now. So what we're looking for is that point, that inflection point where the Fed figures it's time to cut rates, growth is not slowing too badly and pointing towards a recession, and China recovery is probably picks up a little, and Europe holds up. If you have that, to me, that will give a solid underpin to our emerging market shares and currencies as well. So you probably end up with a strongish rand and share prices moving on this side of the world.
If you look back at the first half of the year, is there a particular sector in the market or a particular stock that surprised you to the upside?
So what was interesting is for the first 6 months, well, year to date, the oil share was up about 5%, give or take, relative to the S&P, which was up about 15% in dollars. But when you break it down, your best performing stock was actually Robex, which is probably what you'd call a mid-cap. And when you look down, there was Robex, there was Altron, and there was as well We Buy Cars, which listed relatively recently. And those stocks started rallying before all of this enthusiasm around the new government and everything. Again, just showing you that astute investors were able to pick out solid value among all of these cheap SA stocks and had started buying into them. If this continues, and if the optimism around the new political dispensation continues and we start seeing actual implementation of positive policies, then I would say that these stocks do have quite some way to go, and that investor optimism is well placed.
Roy, let's leave it there. Thank you so much for your time. That is Roy Mutuni, who is a portfolio manager at Sanlam Investments. And of course, we're keeping an eye on the non-farm payrolls report, which is out in a couple of hours. However, let's take a quick break. And when we come back, we'll have SME on Point with Jabosit.